Yeah. Yes. Okay. So the interesting thing when Lloyds and Halifax came together in 2009 is it clearly created the largest mortgage provider in the UK. The assets at 330 billion, that's the same size as the Polish GDP. And you'd think actually in most industries that being the largest actually confers benefits in terms of being the cheapest in terms of cost of production. The reality, however, is in mortgages, the key ingredient is the cost of funds. And given the shape of our balance sheet, we were disadvantaged versus HSBC or Barclays. And the important point for us in differentiating and driving our strategy was being best in terms of service. So the migration programme was really the final step in the integration of Lloyds and Halifax. The final step because it was a very complex one. The final step because it was a very substantial one. So essentially 1.7 million customers, 145 billion of balances that we're moving off a legacy platform on the Halifax side and onto Unisys. That's not something you do without a lot of planning, but very important because essentially it was the last part of moving away from that legacy platform, which was clearly driving inefficiencies and over time greater concerns in terms of compliance, both in terms of new regulation and just the ability to administer it and monitor it on an ongoing basis. So the impact on the customer was really in two particular areas. Firstly, on the Halifax side, very little information had been provided to the customers in terms of the way that their account was constructed. To use the technical parlance, on Halifax it was a unitary account. So a customer could have had a number of subsequent loans, but on an annual statement that would have just been presented back to them as a single loan. The clear advantage in moving to the Unisys platform was that you get much greater transparency on the different elements of the loan, the different interest rates, the different terms over which those were applying, and it gave much greater empowerment to the customers in terms of managing that on a go-forward basis. But moreover, as we went through the transition, it was incredibly important that we kept our customers up to date with what the implications would be, and ideally actually on any change, you want the customers to see as little of that as possible. In terms of our choice of target platform, I think a couple of key considerations. The first one I think is an industry provider who is providing a solution not just for ourselves, but also for a broader range of clients in the same situation. Because through that you have the confidence that that industry provider is going to be on top of the change in regulation which continues to change almost on a monthly basis. And for us in the UK, that's not just national regulation, it's also international regulation. I think the other driver in terms of choice of provider is about flexibility. It's flexibility because our own plans continue to change. In the time that I've been in the Lloyds Banking Group organisation, we've probably had 3 chief executives. Change in leadership will drive a change in direction, so your strategy will inevitably alter. But again, back to that regulatory point, you've also got those changes to contend with, and it's really the flexibility of a partnership which is critical. So in terms of choosing Unisys as our partner on this, and recognise there were probably 2 decisions that we made. Firstly, in terms of the target platform, important I think that you've kind of got a provider who's got that support of a broader industry position, so providing a service not just to yourself but to other industry players. But secondly, in terms of helping some of the transformation activity, so the additional service activity through a programme of this scale. Interestingly, when we started on the journey on the programme, Unisys wasn't actually in that situation. We were choosing to do more of that internally. But as the programme evolved, we recognised the huge advantage we would have in bringing the capability and expertise of Unisys into play to helping us with what increasingly became a very complex project. Without Unisys' engagement, I don't think we'd be in a situation where we'd happily migrated 145 billion of assets. Both in terms of the planning and the execution of the overall programme, and then also at the 11th hour, as we went through the live weekend, we identified inevitably those things that you hadn't thought about, the unintended consequences. The speed at which we were able to work with Unisys to turn those round and have limited, if zero, impact on our customers was a great testament in terms of that relationship. So we've now been in a situation where the platforms have been integrated for over 12 months. Since that time, we've seen huge advantages and benefits. So we're now in a situation where colleagues can load balance essentially. Prior to that, we had one set of colleagues who were working on the Lloyds TSB side, another set of colleagues working on Halifax. If we saw additional demand coming in from one part of our customer base, we weren't able to kind of bring in that set of colleagues to help. You've also got benefits in terms of ongoing maintenance. And on systems such as the Borrowers Platform, which was created in the 1950s, ensuring ongoing resilience on that platform certainly comes with some cost. But we're now able to forego essentially those additional costs that the business had previously been incurring. So definitely advantages both in terms of efficiency, on a colleague experience, and ultimately in terms of the customer experience. And because we'd established a fantastic team, both internally and in conjunction with Unisys, and have limited, if zero, impact on our customers. And clearly the proof is in the final delivery. Based on the expertise that was provided, we and indeed Unisys saw a very successful outcome.